Hi, good morning from Dubai. My name is Jennifer Aguinaldo. I am MEED's Energy and Technology Editor. I am delighted that you're joining us in today's webinar on the Middle East and North Africa Power Projects Market 2025. The analysis and data charts that I will be presenting in today's webinar are extracted from a premium intelligence report of the same title. It's a 570-page report that looks at each of the 14 countries in the Middle East and North Africa region in terms of the regulatory framework, the pipeline of their power generation and transmission projects, as well as the stages of those projects. It's a valuable business development tool for those of you who are looking to expand your presence in the region or to win new contracts. Those of you who have registered for this event will can use a code webinar 600 to avail of a $600 discount on this report, which we are selling for $4,000. And before I start with the webinar itself, we'd also like to mention that MEED Projects Awards, which will be held in November, we're closing the submissions form sometime in June. And so if you still have not submitted your nomination forms, then please do so by June. We have a team at MEED who looks after this event, and feel free to get in touch with them. Right. So if you have been following the news over the past since yesterday, you might have seen the report on the power outages in Spain and Portugal and parts of France since yesterday, which resulted in a major chaos in those countries. So it highlights the crucial role that power supply and electricity plays in our daily lives, and how important it is to get this energy transition right. As some reports say, Portugal basically imports solar electricity from Spain, which is 1 hour ahead of Portugal, because it can the cost of importing it is lower compared to producing them. Producing solar power in Portugal. So it's a stark reminder in terms of how important electricity is in every aspect of our lives today. Right, so I will be dividing this presentation into three sections, if you will. We'll have a review of the installed capacity across these countries and the awards, contracts that have been awarded over the past 11 years. And then the middle section will be about the drivers and the key risks and issues that most stakeholders like you yourself are facing. And then finally, we'll look at the future contract awards in this sector. As I mentioned, the data that I'm presenting today most of them are extracted from the PIR report called MENA Power Projects 2025. Right. So in terms of installed capacity, the cumulative installed generation capacity across these 14 countries that we have included in our report is about 317 gigawatts in 2020, and that has touched nearly 346 gigawatts in 2023, 2 years later, which is equivalent to about 9.1% increase. So you've got Saudi Arabia being the largest market in terms of installed capacity of 91.7 gigawatts. The SEC latest report, Saudi Electricity Company, has a slightly lower number of 89.2 gigawatts, but that's in 2023. And having given there are several major solar plant projects that were completed in 2024, and I expect this number to be slightly higher as of end 2024. Egypt is the second largest country with in terms of electricity generation installed capacity of 60 gigawatts, and the UAE is third with 43.7 gigawatts of installed capacity in 2023. In terms of growth, you can see in the chart before you that the UAE led in terms of percentage growth, thanks to the completion of the first units of the Baraka nuclear power plant, the Hashan IPP in Dubai, as well as the 5th phase of the Mohammed bin Rashid Solar Park in Dubai. fossil fuel fired plants accounted for 89%, still a huge percentage in terms of generation installed capacity as of 2023, with solar and wind together accounting for only roughly 6.4% of the total installed capacity. You've got the UAE leading the MENA states in terms of installed capacity of close to 6 gigawatts of solar and less than 100 megawatts of wind energy. Saudi Arabia still has the highest concentration of oil-fired power plants with a capacity of about 47 gigawatts of its total of 91.6 gigawatts. Egypt has the largest natural gas-fired fleets among the 14 states. So a quick poll question, if I may. Which MENA state is expected to register the highest power generation capacity addition by 2030? If we can spend a minute or half a minute to just put on your answers. Okay, I think Nabil, we will move on to the next slide from here. Um, right, okay, of course. 90% is Saudi Arabia. In terms of absolute value, in terms of capacity additions, Saudi Arabia will have grown most by 2030 with an additional 60 gigawatts by then, based on their pipeline, based on their plan to procure 20 gigawatts of renewable energy every year until 2030, among others. But in terms of percentage growth, based on this forecast, we have Iraq potentially doubling its capacity by 2030. But of course, caution must be included that most of the projects in Iraq, some would prefer to say aspirational, given the delays and given the amount of time it requires to get the project off the ground in Iraq and the UAE. Of course, will have the UAE, Libya, and Qatar will all have grown above average during this 5-year period. In terms of demand growth, we are seeing Global Data, the parent company of MEED, forecast a compounded average annual growth rate of 3% annually between 2025 and 2030. So the main drivers would be increased population. So between 2020 and 2030, we're expecting 15% more population in the MENA region, significantly driving energy demand. That's over 1 decade, 69 million more people, high ambient temperatures requiring increased cooling requirements, with air conditioning accounting for 70% of peak electricity consumption in the GCC, and growing urbanization is also contributing to increased demand in terms of electricity power consumption. Now we move on to the contract awards analysis. So between 2015 and the first quarter of 2025, were about 292.7 billion worth of projects that were awarded across these 14 MENA states. So that equates around 27.8 billion of annual average across this region. Generation accounted for 68% of awarded contracts, while transmission and distribution overhead lines, substations accounted for the remaining 32%. Of course, the main outlier would be last year, and I will talk a bit more detail in terms of what happened in 2024. But as you can see clearly on this chart, it's nearly thrice the annual average during this period. Saudi Arabia accounted for over 60% of the total value of awarded contracts in 2024. For 2025, we see around 13.5 billion. This is the first quarter in here. And we've considered in this, this value considers the round-the-clock solar PV project in Abu Dhabi, which were Master has already selected the preferred contractors and subcontractors, but that project has yet to reach financial close, as well as the DAFRA open cycle gas turbine plant project, which Samsung CNT and Trojan won, and will be developed by TAQA and the wind farm in Egypt. In terms of transmission and distribution contract awards, so this is very important to know that if you look at this chart, the share of T&D in terms of total power contract awards has been fluctuating over the years. But you can see that in 2021, it accounted for 47% of the contracts awarded in 2021 and around, I think, over 30% in 2024. The key thing to remember is that as most countries in the region modernize and interconnect their grids and aim for efficiency and minimize losses of electricity, of power, then this will be a key area of investment over the coming years. So the first one you see under execution projects for a high voltage direct current networks. It's like the one in Abu Dhabi, the Project Lightning, where they will be sourcing energy from onshore and cleaner power generation plants to supply electricity to offshore sites, ADNOC's offshore sites. And then you also have an ongoing project between Egypt and Saudi Arabia to transmit power between the two countries. So that's another HPTC project. And then last year, we've seen massive contract awarded in Saudi Arabia for the HVDC interconnection of various regions in Saudi Arabia. And then finally, you have projects basically that are meant to help evacuate power generated from remote solar and PV plants across these countries. It's the same chart, if you will, but it just shows if you look at the installed capacity in my first slide, we mentioned that solar and wind accounted for only 6.4% of installed capacity, but that is quickly changing, with solar especially accounting for 34% of contracts that have been awarded between 2015 and 2025. So that's changing and will be changing rapidly, except that last year we've seen a resurgence of thermal power plants. So if you look at this chart, you have contract awards for gas-fired power plants gradually declining between 2015 and 2020, and until 2021 rather. And then there's a rapid rise from 2021 until 2024 as more off-takers and procurers restarted procuring gas-fired power plants for reasons that we will be discussing in the next slide, but mainly Saudi Arabia, as I said, awarded 60% of the contracts last year. And so resurgent gas-fired plants claimed 58% of total contracts awarded in 2024, eclipsing solar and wind by a huge margin. So on your right upper chart, you have the 2021 generation contracts by feedstock, where you have natural gas-fired power plants mainly accounting for 27%, and that shot up to 58% in 2024. So that's a huge increase in terms of thermal power plants. Now, in terms of contracts and execution by country, Of course, no brainer. Saudi Arabia is the largest market in terms of projects under execution. In total, there's 168 billion worth of projects in execution in Saudi. By the way, we will be providing you a copy of these slides at the end of this presentation, and please feel free to send in your questions, and we will try to accommodate that in the last 10 to 15 minutes of this presentation. What was the key driver of recent increase of thermal power generators in Saudi Arabia and Abu Dhabi? I'll take that question now because it's relevant. I think in Saudi Arabia, as you might be aware, they have a liquid fuel displacement program. So as one of my earlier slides has shown, about 47 gigawatts are still running on liquid fuel, and that needs to be replaced, and gas would present a more sustainable sort of feedstock compared to oil. And as they build more renewable energy capacity, which is intermittent, then I think they've come to realize that they need more gas fired power plants to boost their spinning reserves, given the intermittency of renewable, as well as the potential mismatch between the peak production of solar plants and the peak demand, as well as, unlike in Europe, for instance, if you're asking from Europe where there's significant amount of wind power, then that might not be the case. Although there is capacity, they're building wind power in Saudi Arabia, but I am not sure if that would be my opinions that they would need these gas-fired power plants to as they build more renewable energy to ensure security of supply. And in the UAE, today the news, or yesterday the news, was that they have extended Shwayhat 1. This is a gas-fired independent water power project. It produces electricity and generates desalinated water as well. But they have signed a contract, so EWEC, as well as the team of Taka, Engie, and Sumitomo agreed to convert the plant into an IPP, an open cycle gas turbine plant. So this is one of the trends that we're seeing today. So you either build new plants or build, whether they're CCGTs or open cycle gas turbine plants. In Qatar, they've just awarded the Picker plant, for instance, that will help spinning reserves and make the grid more flexible as they bring more renewable energy on their grid. Okay, and back on these projects under execution, Saudi Arabia accounting for the largest, 52% of all projects under execution today. UAE is the second largest, with about $21 billion worth of projects mainly between EWEC and DIWA in Dubai. And thermal plants account for 63 billion, or 54% of the projects under execution. This was and 36% by renewable energy. In terms of selected contracts under execution, so I've just it's a great year. I mean, I don't remember a time, or maybe you do, but I don't remember a time where there have been 168 billion worth of projects that are under execution in these countries. So it's a massive amount of project, and these are just a glimpse of the projects that are under execution today. And if you're a contractor, I'm sure you'll find your name in here. So the 3.7 billion or $5 billion HVDC link that connects the central region of Arabia to the southern region was awarded to Alphanar and China Electric Power Equipment last year. So that's a major transmission distribution project, along with the Abu Dhabi one, which Samsung Senti and Johnson Nolan Prishman is implementing. In terms of solar power projects, there's Alras 2, there's the Asadawi solar power, there's the PIF projects that are under execution, massive solar energy capacity that's under execution. A key thing to remember is in 2023, Saudi Arabia awarded 7.2 gigawatts of combined cycle gas turbine plants for Qasim and Taiba. So that's the first, I think, since Fadili was awarded to NG in 2016, if I'm not mistaken. So so these are the first gas-fired power plants being procured on an independent power project model that Saudi Arabia awarded in 2023. And then last year, of course, similar capacity was awarded for Ruma and Nairia last year. So it's a great it's a great time in terms of if you're in this sector, in terms of the volume of projects, the capacity of projects that are under execution. Okay. Right. So if you can join us, you can join MEED. We have a new WhatsApp channel called Industrials, MEA, and APAC Global Data. If you scan this QR code, then you can receive breaking news, latest industry updates, and strategic insights from MEED directly on your phone. So do have a look and scan this if you want to receive breaking news and other insights from us on your phone, on your WhatsApp. Okay, in terms of top clients, I'm sure there are no surprises here. Saudi Electricity Company emerged with the highest, the largest share of contracts awarded, contracts that are under execution, followed by SPPC, which is the procuring authority or the principal buyer in Saudi Arabia, or for around 35.9 billion. So of course, these projects have been awarded to private companies, so most of these would have been divided between the leading utility developers that bid for those projects, and then of course Iraq, Ministry of Electricity, Libya, and then EWEC and DIWA, basically on the fourth and fifth slot in terms of the volume of projects that are under execution. We have a poll question, if that's all right. Which EPC contractor has the largest pipeline of projects under execution? While waiting for the results, there's a question here regarding, it might be too big a question for me, but I'll attempt to answer it. Does the blackout yesterday in Spain and Portugal expose grids' vulnerability to renewables in the absence of large spinning reserves to make up for sudden disruptions? I think the investigation is ongoing, so we still don't know what caused what really caused the outages. But there is some preliminary evidence that says it could be a factor. But yes, as I mentioned earlier, I think it shows stakeholders like yourselves what needs to be done in order to make this energy transition smooth and to avoid such unpleasant incidents like the one we've seen in Portugal and Spain yesterday. I'm not sure if the result of the poll has been presented. Yeah, so LNT, 30% of you think LNT has the highest pipeline of projects. 38% thinks Power China. Let's see what our data tells us. Right, so India's Larsen & Toubro is a top EPC contractor with contracts under execution estimated at $19.8 billion. So this includes the NEOM, the solar and wind power and BSS for the NEOM Green Hydrogen project. The next one would be SEPCO 3, and third is Power China, followed by Alphanar projects, mainly because of that huge HVDC contract let's say last year, and then China Energy. You have so and then Shanghai Electric and Doosan Energy of South Korea with 5.8 billion, and then Samsung CNT at $5.3 billion. This is based on projects under execution. Now, we move to the key drivers. So I'll do this quickly in terms of so I don't know, as I mentioned, if there has been a time when there was 168 billion worth of projects, both power generation, mainly power generation and transmission distribution projects that are under construction in this region. And the reason for these, especially for last year's spike in contract awards you have the economic and industrial expansion with the uncertainty in long-term oil demand. There's a push to for downstream sector and other sectors that are energy intensive as well. So that will boost that will contribute to increased demand in terms of energy and electricity. And there's a boost for artificial intelligence. They're developing capacity to support AI, and as we've seen in Abu Dhabi, they're investing 36 billion dirhams, about $9.8 billion, just for energy infrastructure. That would be solar with BESS, OCGT, and transmission network for AI. The resurgence of thermal plants, as I said, due to the liquid fuel displacement program in Saudi Arabia. There's also expiring capacity that are being either extended or extended. As we have seen in Saudi Arabia last year, in the beginning of this year, there's been a flurry of gas-fired power plant contract awards. And we know from good authority that a Saudi electricity company reserved around 30 gigawatts worth of gas turbine capacity, which shows the extent of their ambition, the extent of their plans in terms of building gas-fired power plants in Saudi Arabia as well as in other places where they are now bidding for projects. Net zero 2050 and 2060, everywhere we see renewable energy plants being procured from Algeria, Iraq, Saudi Arabia, of course, as well as nuclear capacity build out to decarbonize electricity systems. The first nuclear project in Egypt, for instance, is underway. Then there's the interconnectivity. So that really indicates that there will be increased transmission distribution projects over the next few years. Saudi Arabia has, as you said, it plans to expand its network by 60% by 2030. So that's thousands of kilometers of overhead line and substations in order to allow efficiency in terms of transmitting and even forecasting supply. And then of course there's battery energy storage systems some are on grid, just like what we're seeing in Saudi Arabia, while others are in tandem with a solar PV project, and they are designed to address the intermittency of renewables, as well as in Saudi Arabia, they're being built. The on-grid ones are being built next to load centers, which aims to boost or strengthen their grid and to be able to save and discharge power when needed. And there's also the emerging trend on peaker plants, as we've seen in Qatar and in Abu Dhabi. So ongoing thermal and renewable energy capacity build out present certain types of risks to stakeholders. And this might be a topic that many of you really want to discuss or talk about. But it's a good problem to be had. But there are key issues in terms of availability, let's say, of qualified EPC contractors. There's so many, you've seen the slide in terms of EPC contractors, and there's every single one of them is taking on as much project as they can. So there's an opinion that most of the EPC contractors are at capacity or near their full capacity in terms of projects. So that could be an issue for off-takers and developers. And then for off-takers, there's a mandate for lowest cost energy transition. So they're faced with balancing which one meets this mandate. Is it gas? What's the cost of gas? Solar? Is it batteries? CCUS? Is it nuclear? So we're seeing this at play with most off-takers and principal buyers and utilities in terms of their capacity planning and procurement. But one thing is clear, they are really procuring a lot of capacity than we've seen in the past. There's also this growing battery energy storage system projects being procured, but there are some of the people I talked to basically say there's a likelihood of low bidder turnout due to capabilities of these contractors or developers. But we'll see, because we're just seeing the first BSS bids being submitted or open. So that will be something that we will be able to provide a clearer answer for over the next 6 to 12 months, hopefully, for developers and investors. And this is a very important one. I hear from people that there are lower margins. So so you've got the lowest cost energy transition mandate on one hand from the buyers, but at the same time, the developers looking to have better internal rate of return, and that has not been over the past few years. What I've heard is that it can be better. And then many of the developers, most of your mainstay developers, if you will, Japanese developers, or even the local developers like Mazda or even Apple Power, focusing on other regions like Asia or Central Asia. And then there's net zero targets by 2045 or 2050. NG, Marubeni, some of these leading developers are looking at 2045 net zero target. So with most power purchase agreement lasting 20 to 25 years, and the projects that are being awarded today will have to have shorter duration or concession period, so that they will be able to have, so they could probably exit out of those contracts or have CCUS in place before then, just to reduce or eliminate the carbon footprint of those plants by 2045 or 2050. And another new trend, I would suppose, this is from our one of the people I've been talking to, basically indicating that Saudi banks are raising financing prices. So this could put upward pressure on tariffs. But other international developer banks are still okay. Developers, the utility developers that can introduce development financing, let's say from Japan, South Korea, or China, can have some advantage in terms of their next bids. For EPC contractors, what I hear is that they're becoming more selective because they're being conscious about delivery risks, and in terms of they're also pushing back in terms of performance guarantees. It used to be that they provide 10% performance guarantees, but what I'm hearing today is that they are pushing the developers to share. If, let's say, an off-taker asks for a 10% performance guarantee, then for them to share that 10% between them, again, because of the amount of work at hand and the risks that they are being exposed to. And at the very top, but it's at the bottom of this chart, but at the very top, in terms of gas-fired power plants, would be the availability of gas turbines. Because if you will recall, from before years before the pandemic, there have been a major focus on renewable energy and energy transition. And so that, as well as the COVID-19 pandemic, before the COVID-19 pandemic, most of the OEMs have clipped their expansion plans in terms of capacity to roll out new gas turbines from their production floors. And as someone told me, it's not something that you can turn on and off if you decide to expand, because it will require huge investments. So we don't know how many of them are expanding and if when, but I think most of them are in a wait and see situation where they want to see if this spike in demand for gas turbines is temporary because of those programs mentioned, or will there be a sustained demand for gas-fired gas turbines beyond 2030? So that's a question for the OEMs. And of course, the next poll question would be this one. What will be the levelized cost of electricity trend for the rest of 2025? Higher for CCGT and OCGT plants and lower for solar and wind? Higher for both thermal and renewables, or it depends on macroeconomics and interest rates, cost of capital? Right. There's a question in terms of do you have visibility of how the Saudi nuclear power plant program is progressing via the Waihin Nuclear Energy Company? So if you are a MEED subscriber, I've written a report last week saying that KK and the Waihin, either or both of them, have initiated one-to-one meetings with the countries whose nuclear technology providers have been invited to bid for the contract to build the first large-scale nuclear power plant in Saudi Arabia. So I don't know which country went first, or I think second or third, but we understand that China, South Korea, France, and Russia are are still in this project. So we don't know. There is a bid deadline, but that the submission of the bids will be running in parallel with this government to government level talks. So obviously it has been delayed, and there are expectations that it will be one of the items that President Donald Trump might be taking up with the leadership of Saudi Arabia when he comes for a visit a few weeks from now. Okay, in terms of poll question, interesting. What will be the trend for LCOEs for the rest of 2025? So you've got 38% of you saying it will be higher for both thermal and renewables. 34% say it depends on macroeconomics and interest rates falling or rising, 34%. And the last 28% says it will be higher for CCGT and lower for solar and wind. Interesting. Okay. Before we go to the last portion of this presentation will be about the pipeline. I mean, what contracts can be won, what projects are at hand. But before that, this is a very interesting chart for me, at least. CCGT tariffs are generally expected to trend upward, while renewable tariffs may stay within norm. You've got this. We've got the surprisingly, SPPC disclosed the tariffs for REMA or RUMA 1 and 2 and IREA 1 and 2, which basically provided me with a benchmark compared with previous projects. So the last one was Fujairah F3 in Abu Dhabi, in the UAE, which was 4.5 cents a kilowatt hour. The the tariffs for REMA and IREA is not very high compared to that. But if you go back, of course, 10 years before for Rabdik 2 in Saudi Arabia, that's basically 1.9, so that's a huge jump. But of course, the EPC costs have increased since then. In terms of IWPPs, now this is harder to compare because of the capacity, the tenure, I mean the PPA period, the concession period, the location as well. So in terms of IWPPs, just for the sake of having a benchmark, a very simple benchmark, if you will. So the last IWPP awarded in 2018 was Alud 2 in Bahrain in 2018, and the levelized cost of electricity is 3.4. And it has a capacity of 1.5 gigawatts. For Facility E last year, it was awarded by Kahrama in 2024. The tariff is 5.2 cents a kilowatt hour for a capacity that's much higher, which is 2.4 gigawatts. I think Facility is in the process of reaching financial close, but this basically provides you with a feel in terms of where the tariffs are going. In terms of renewable IPP tariffs, this is still the place where you can get the cheapest renewable energy, with averaging 1.4, 1.5 from a low of 1.04. I remember that in 2021 for the Shuaiba solar PV project, which Aqua Power won in round three of the National Renewable Energy Program in Saudi Arabia. Okay, this brings us to the future contracts analysis. Oh, that's quite fast. Over 406 billion worth of power generation T&D contracts are in the pre-execution phase, based on proprietary data by MEED projects. So that's generation accounts for 87% of the. Well, one of the reasons generation is always a lot higher than T&D is that most of these projects have a clear visibility, so the procurers basically present their annual procurement plans for the next 5, 7, 10 years. So we can easily sort of estimate what projects will be coming in the market, and that's for the purpose of allowing investors to accommodate resources to these projects. But that doesn't mean that only 13% in the future will go to T&D, because as we've seen in historical data, about 31% of what's been awarded during the past 11 years were T&D contracts, and Saudi Arabia accounts for over 113 billion of the total. So that's a huge pipeline, definitely. It's very important to mention solar and wind schemes together account for close to 60% of the total planned and unawarded projects in MENA states, which stood at $356 billion. But when it comes to projects under bid today, which is about 37 billion on the right line graph, they account for about 54% of the total contracts, generation contracts that are in the bid stage. So who are the top clients? I've just answered a quick question regarding the nuclear project in Saudi Arabia. So the top three clients going forward, assuming, well, for non-nuclear suppliers, that would be NOAA, Shams, and Iraq Electricity Ministry. Although again, a word of caution is based on hard data from our proprietary business intelligence product, but Shams in Algeria and Iraq was so there have been major activities in Iraq, but before last year, there has been a very slow process in terms of getting those projects off the market. And I do understand that many of you who have tuned in today maybe more interested in markets outside of Iraq or Algeria. But this is just to show that they have these plans in place and that they could gradually go to the market. ENEC is here mainly because there is a plan for a Baraka phase 2, although there are some contacts are telling me that this might not start this year rather than 2 years later. But still, in terms of planned projects, ENEC will be a key client to watch out for. And of course, usual SPPC, D1, EWEC. X-Links in Morocco, that will be the UK startup that plans to build renewable energy generation plants with gigawatts and gigawatts of capacity that will then be transmitted to the UK. Selected unawarded projects. SPPC and EWEC are the most active power sector clients based on this data. There's a lot more, but these are some of the largest projects that we know of today. There would be thousands of projects on the pipeline, including transmission distribution network. Kuwait, Bahrain, and Oman each have sizable projects, both gas-fired, thermal, and renewable. Saudi Arabia and Kuwait are pursuing both IPP and EPC projects, while the rest are almost exclusively procuring projects on IPP basis. This would be one of the last slides. So battery energy storage systems, so last year or early this year, the first 500 megawatt BESS project in Saudi Arabia is completed or came online. So that's around, oh, it depends. I'm not sure if the rated capacity is probably 1,700 megawatts if this is 3 hours of storage. So that's one of the largest, over 1 gigawatt BESS plants, 17 battery energy storage plants with over 1 gigawatts of capacity that was completed last year globally. So it was a big deal. Costs are coming down drastically. According to some experts, they could drop to as low as 50 a kilowatt hour to 25 a kilowatt hour, or even up to 10 kilowatts by 10, sorry, that's $50 a kilowatt hour, to $10 a kilowatt hour by the end of the decade. In terms of the pipeline that we're tracking at MEED projects and at MEED, we have about 55 gigawatt hours of estimated weighted capacity. This includes the 19 gigawatt hour capacity from the round the clock solar PV and BESS project that Masdar is developing in Abu Dhabi. So that project is worth $6 billion. It will have a 5.2 gigawatt solar PV plants and 19 gigawatt hour of battery energy storage with the goal of producing 1 gigawatt of baseload renewable energy. There's an operational 1,300 megawatt hour BESS plant in the Red Sea development project in Saudi Arabia that was built by Huawei, I believe, and that is operational as the first and the largest that was in operation in the region. The first, so Saudi Arabia, as I mentioned earlier, Saudi Arabia is pursuing both PPPs and EPC in terms of generation power projects. And it's the same for BESS. So it has awarded, so the BISHA was implemented using EPC, and there's 2,500 megawatts or 2,000 megawatts that is also being implemented on an EPC basis. But the first independent storage project in Saudi Arabia is under procurement. It has 2,000 megawatts of capacity, I believe. So that's SPPC, which is procuring it. Sorry, it's 1,600, potentially 1,600, $1.6 billion. There are 4 of them in Al Muwayhad, then Al Kushaybi, and Al Kafaha. So an area that people are watching very closely. Huge interest from developers and contractors, so we will see the first publicly tendered IPP, best IPP in Abu Dhabi shortly. Because AWEC is procuring 400 megawatts, a pair of BESS in Abu Dhabi. So I think we will be seeing who bid and the prices at some point. Right. The next slide will be the last one. So power generation and AI, I mentioned in passing that Abu Dhabi is leading the region and perhaps globally in developing generation capacity, specifically catering to its national AI strategy. So I mentioned TACA and EWEC basically confirmed that the round-the-clock solar PV plus BESS project, so $6 billion part of this energy infrastructure that will cater to AI. So that's one. The other one would be the DAFRA open cycle gas turbine project that was recently awarded by TACA. It will be owned and operated by TACA with Samsung CNT and Trojan doing the EPC for that project. And there's the remainder of that budget will be allocated to advanced grid infrastructure, which will be implemented by TACA Transmission to build advanced grid infrastructure. So we've moved over the past year or 24 months, we've seen basically data center operators move from several megawatts, building several megawatts of data centers, 15 megawatts, 30 megawatts to, let's say, 100 megawatts, 65, 100 megawatts. We've seen Kazna data center in Abu Dhabi building a 100 megawatt hyperscale data center in Ajman, which is the first of many, as it says. So this is very important because they are an energy intense industry, and they are expected to grow. So globally, electricity, they account for 1% of electricity, but they are expected to double or triple over the next 5 years. In fact, PW says the Middle East data center capacity can triple from 1 gigawatt today to 3 gigawatts in 5 years' time. So that will be a massive jump demand for electricity. And then based on our proprietary data, we have 12 billion worth of data center construction projects that are in the planning stage, and 7 billion that are under construction. So this gives way to new trends like SMR, small modular reactors, small size nuclear power plants could be something that could be part of the solution in terms of responding to this unique trend in terms of demand for electricity. So it's a very interesting time. It's a very interesting sort of assets for many EPC contractors, many contractors, MEP contractors. And it's given that most governments led by the UAE and Riyadh, they have this $100 billion worth of funds to invest in AI and related technologies and data center infrastructure, then it can only grow in terms of the value, in terms of the overall demand in electricity and power and water as well. So that brings me to that is more or less the last slide, but I will now look at some of the questions. If I can answer some of your questions now, feel free to send them over. Okay, but before that, again, I would like to, before I answer some of the questions, I'd like to reiterate this discount that we're offering to all of you who have registered for this webinar. The price of the MENA Power Projects 2025 report is about $4,000, but you are entitled to a $600 discount if you scan or click this code. Right. So on to your questions. We have the last 5-6 minutes. Let me have a look. Okay. Before that, we have a short poll as well. if I may, would you like us to call you to understand MEED? If MEED can support your business, just if you can just oblige to this poll, and then we will now proceed to those some of those questions that you might have. I'm curious to know if there's any correlation between the number of power gen projects in the MENA and demand for building automation equipment. Do facilities related to these projects typically make significant use of building automation technologies? I am not 100% sure if these power plants will require a lot of building automation technologies, but what I know is mainly process automation. So they are going into digital twins, building how to build and operate these assets more efficiently. Then there's so they will be using AI, they're using machine learning, all the stocks that make up AI in order to make these assets work more efficiently. So there's definitely some correlation in terms of process automation equipment. But I am not entirely sure in terms of building automation equipment. The data center data that I've just presented, that looks at the overall project sector. So it refers to all the known and planned. Definitely there are projects that are not yet in the public domain or that are not known, especially those that are being built by the government or government-owned entities. But that's as far as we know, that's the pipeline of data center projects that cater to governments, cater to retailers, private entities, hyperscalers, among others. Who are the main data center developers in the GCC? There was a webinar on the GCC that you just missed. Yes, there are the main. I've already mentioned Kazna. I've mentioned there's Gulf Data Hub. There's Data Vault, which is just starting. There's Equinix, of course, which is a US-based company, and then of course you have the hyperscalers like Amazon, having built their first availability zone in Bahrain some time ago, and all of them are planning to build or either rent data center spaces here, having allocated multi-billion dollars for building data centers here in the region, primarily in Riyadh and the UAE. Is there any future projects in Saudi Arabia, cogeneration, water, and power? That's a very good question. I am not aware of a planned IWPP in Saudi Arabia today. Today we have an IWPP in Kuwait that is expected to be awarded soon to Aqua Power. And GIC, they are the lone bidder for the Ultra North to entry IWPP. And Bahrain is also planning an IWPP in Sitra. Those are the two IWPP projects that I am aware of. I have not come across any plans in Saudi Arabia or the UAE so far. Okay, so yes, I might have focused mainly on, I might have overemphasized the resurgence of gas-fired power plants. But yes, indeed, in Saudi Arabia, for instance, the Ministry of Energy said in 2023 that they are planning to procure 20 gigawatts of renewable energy capacity annually, starting in 2023. 2030. So that's massive. And if you have seen the pipeline, the future projects chart as well, where you have 406 billion worth of projects that are in the pre-execution phase. a huge percentage of that is solar and wind. Actually, the majority would be solar and wind. So that would give you an idea in terms of the scale of projects that are being planned, renewable energy and wind projects that are being planned, not just in Saudi Arabia, but everywhere else. The UAE, Bahrain, Oman, Kuwait, Iraq, Algeria, Tunisia, Morocco, Jordan. So all across those countries, there are massive plans because they are looking at diversifying their energy sources so that anything from 30% or 25% of their production mix in 2030 to up to 52%. I think that's the by 2030. So there's going to be a huge pipeline of renewable energy going forward. I have just talked about this resurgence of CCGT mainly because it was unforeseen 5 years ago. Because at the time when when we were looking at energy transition and at procurers implementing their energy transition plans, that there was a decline. There was a steady decline of gas-fired power plants, which was reversed starting in 2021. How is Kuwait preparing for enough power supply for coming summer for over the coming summer? And we have blackouts last year. So I think there was they've just there's a power plant, 900 megawatt power plant. They've just completed just put another I think 900 or over 1 gigawatts 1 gigawatt of capacity from one of their plants that have been refurbished or maintained. So that would add big help in terms of coping with summer demand spike in Kuwait. Indeed, there were major power outages in June last year, and that's because number one, as the temperature rose, the requirement for cooling increased, and therefore the demand increased, and tripping at least one power plant and making the grid. Causing some problems with the grid. So that's and also don't forget last year, the Ministry of Electricity has concluded a deal with the GCC Interconnection Authority to procure around 400 megawatts of capacity from the GCC grid. So that could help address, hopefully avert any outages this coming summer in Q8. And there is another interesting question here, more of a comment than a question that might. Okay, so I'm not looking at that. So basically, there was a question in terms of how the interconnection can sort of interconnection between countries as they put more renewable energy on the grid, and how this could help address intermittency, because the peaks would differ between one country to another. But at the same time, if it opens up some vulnerabilities in terms of supporting in terms of what we've seen in Spain and Portugal. But definitely there's a big push in terms of this GCC interconnection. Oman is building a second interconnection with the GCC grid, for instance. So that's very important in terms of enabling emergency supply when needed, just as we've seen in Kuwait last year. So those are a key focus of investment, definitely among stakeholders, which is to build strong, resilient grids as they look at exporting more energy and being able to foster energy trade, not just among the GCC, but even beyond. So that's part of the long-term plan, which is, as one of the energy ministers here in the GCC said, there can be no sustainability without interconnectivity. So that's a major priority, I suppose, for many government and stakeholders and utilities in this part of the world. So I think that's about, I think there are many more questions, but yes, we will be receiving a recording and the slides. And so, yes, it has been a pleasure hosting this webinar. Thank you all so much for your time, and hope to see you again soon. Cheers.